What is good, Syracuse University? It is so good to be back after a short but very needed vacation. And let me tell you, what a time to come back. Hopefully by now you know that I'm not a permabull when it comes to silver. But this week was incredibly critical for silver for three major reasons, which we'll cover in a few moments. First, we need to start with the daddy market, which is gold, which had futures prices significantly break through $2,600 per ounce and peak all the way at $2,614. As of right now, spot price is $2,577. But that means this week, gold went up about $80, which was almost a 3.5% increase. But on top of that, this is the 34th time gold has reached an all-time high this year, and we still have 3 months left. Meanwhile, silver finished the week by increasing 81 cents, with spot reaching 30.69, which meant silver went up almost 10%. As we think about the last 2 weeks or so, but especially the last week, we saw a number of factors kind of lay the runway for silver to take off this week and check three critically important boxes. And we'll get to those in a second, but let me start about why we saw such a big move this week. As I see it, there were 5 reasons why this move really happened. One, we have the reality of rate cuts coming this week, with the market being in a little bit of a tizzy as the market is actually trying to will the Fed into a 50 basis point rate cut. In fact, by Friday, the Fed watch tool was showing a 50-50 probability of a quarter point or a half point rate cut. I think a half point is kind of a pipe dream, but regardless, half of the market will be right and the other half will be wrong, which will definitely cause some volatility next week. Second thing is, while inflation is trending downward / flattish, it's still well above the Fed's target rate of 2%. And the economy is actually holding up pretty well, all things considered. But then we saw August CPI numbers come in a touch lower, which was encouraging, but then we also saw PPI come in higher. And that higher PPI really seemed to push silver and gold on Thursday and Friday. We also continue to see interest rates fall worldwide, with central banks cutting interest rates. The fourth thing is that there's additional catalyst that seems to be coming from India and China buying more silver. But more importantly, higher gold prices seem to have people rotating towards silver because of silver's price point. And the reality is that most people prefer the feel of 80 ounces of silver compared to 1 ounce of gold. Psychologically, it just makes people feel better. And the fifth thing is that ultimately, we just continue to see mixed messages about the economy. But more importantly, silver's movement followed what we expected from a technical analysis perspective, which means that the price gyrations that we have been going through actually didn't break any technical patterns, and that's really important. And the significance of this move is really because it triggered these key indicators. And let me go through them one at a time. First, this week's move represented silver finally moving in tandem with gold and breaking free from tracking copper, which it has been doing. I know you're thinking, copper? What are you talking about? Well, we often think about silver tracking gold. That isn't always the case. Take a look at this chart of copper and silver prices since 1989, and their movements are almost identical. Now, let's compare that to the last 6 months of gold and silver prices, and we're starting to see that tandem movement again, which is very important. I tried charting copper, gold, and silver, but the chart was a little too messy, too noisy for me to show you. But what I found was that this pattern of silver being kind of stuck between gold and copper. And what we needed for silver to do was to return to its historical correlation with gold, which is starting to do with these latest moves. Now, while we all see silver as money, we needed to see silver start to perform like a monetary metal and not like a base metal like copper, which it had been doing over the last few months in particular. Real quick, folks, I don't do this very often, but 72% of you are watching this video on this channel are not subscribers. So if you're enjoying this content, you want to see more, please do me a favor and hit that subscribe button. Thank you for even considering it. Also, shout out to my boy Frankie. Thank you for the beautiful gift, brother, and for the John Wick coin. You know I love those. I appreciate you. Another key indicator for silver has been the weakening dollar. As you can see from this chart, gold has the ability to go up or down with a DXY. And so you can see that it's not always this relationship that we think about, that we need a weaker dollar for gold to go up. But silver needs a weaker dollar in order to go up. Take a look at this chart of silver versus the DXY and notice the negative correlation. As the DXY goes up, silver tends to go down and vice versa. And so this was very important that we started to see the dollar weaken and silver respond very forcefully. And the third thing that was really important that happened was that with silver starting to wake up and reconnect with its movements of gold, we can expect silver to have a very powerful move at some point. But here's the reality. Silver has outperformed gold 6 out of the 7 of those bull markets since 1967. So that is a very important thing. And now that they're starting to link back up, we can start to expect silver to outperform gold some point down the road here. Ultimately, as investors, we have to appreciate that these markets are very complicated and nuanced, especially when it comes to silver. One of the most important things we can do is remember that we have to remain and act bullish when we are in a bull market. We can't allow the normal and natural retracements of the market to dissuade us from what we know is fundamentally happening. And we've seen a lot of that with folks selling and giving up on silver. And this is important because we have to prepare ourselves for what I think is going to happen next. And here's really what it boils down to me. I think that we're going to see some weakness next week. So just be prepared for it. But I think people are going to do a buy the rumor and sell the news event when the Fed announces its rate cut. Remember, half of the market is expecting 50 basis rate cut. And right now, we just don't know exactly if that is or is not priced into silver and gold. So we're just going to have to see. The next thing is that we should also expect some traders to take some profits, especially in silver, because a 10% move in a week is very significant. And then on the bullish side, we are waiting to see how silver performs at between $32 and $34. This will be critical because breaking $34.58 will be the highest price in silver that we've seen since September of 2011, more than a decade. And I think once silver trades into this $32 to $33 price range, we will start to see people starting to FOMO into the market. So we need to be prepared for that. I'm not going to say rush out and go buy everything, but make sure you have your position the way you want it and that you're ready for it. In the comments section, how big of a rate cut do you expect from the Fed this week? What do you expect from silver next week? Do you expect it to go up, down, or sideways? Or you can just simply put an A+ in the comments so that everyone knows that you always stack smarter and never stop learning.